Alrighty, time for the main course this video, AMD. Alrighty, let's get rolling. So, first off, you got to understand AMD has four big business lines. One is data center, because we're going to look at what's going on with each of these businesses, because there's major changes going on with each business right now that I need to show you, okay? But this is the main big dog business, data center. Leadership performance in TCO across cloud, enterprise, AI workloads, right? Think about all these companies spending a fortune right now, right? All the big companies, Microsoft, Google, Meta, all of them, right? Tesla. That's more data center related revenue, right? And that's where AMD comes in play. Second big business for them is client, performance and energy efficiency, productivity, AI, gaming, content creation. Then they have their gaming side of their business, right? And then they have their embedded side of the business, okay? Which could be a whole host of random things in embedded, okay? Now, if we look at revenue, first off, up 24% year over year, very strong number from 6.2 billion to 7.7 billion. Now, if you compare it versus, let's say, Nvidia's revenue growth over the last couple of years, it looks like not that much, right? 24%, like, put me to sleep compared to Nvidia. But let's be very clear. AMD does not have a $3 trillion plus market cap on it like Nvidia does. AMD's market capitalization is well under $200 billion, right? So we're not even talking about companies that are remotely valued in the same ballpark, right? AMD doesn't need to come in with the ridiculous 100% revenue growth, 70% revenue growth, 90% revenue growth. They don't need to do that. They need to put up great numbers. And let's be very crystal clear about this. 24% revenue growth, I could tell you like 99% of companies, if not more than 99% of companies in the stock market, would be happy to trade places with AMD because 24% revenue growth is phenomenal. Gross margin expanded on a GAAP basis, generally accepted accounting principles, to 51% from 47%. Non-GAAP expanded to 54% from 51%. Operating income, now keep in mind non-GAAP I think is more important, and I'll show you in just a minute in the income statement. Basically they got a bunch of one-off charges and things like that going on with the business. They got a lot of acquisitions going through. It's a whole mess right now, right? So on a GAAP basis, AMD's numbers are messed up in 2025 and kind of in 2024 as well. That will shake out in 2026 and beyond, and the GAAP basis will be a lot better to look at. So you really want to look at non-GAAP for AMD right now. $2 billion in operating income versus $1.4 billion in the same quarter last year. EPS on non-GAAP basis, $1.09 versus 77 cents in the same quarter last year. Now, this matters significantly to what's going on with AMD's business model right now. Because look at this. If you look at the total fiscal year 2024, revenue grew 14%. But what was the number I just showed you? They just grew in the most recent quarter 24%. So there's clearly a revenue acceleration story going on with AMD right now, where you're getting kind of like what happened with Palantir a couple of years ago, where Palantir bottomed out growth and then just started growing more and more and more and more, quarter after quarter after quarter. This is exactly what we're seeing with AMD now at this point in time, right? Where the most recent growth is far exceeding the previous growth. So that's phenomenal. Additionally, if you look at the margins overall for the fiscal year 2024 versus their more recent margins, right? Look at the margins most recently, 51% on a GAAP basis, 54% on a non-GAAP basis, right? And then go ahead and look at the full year 2024, 49% and 53%. So recently the margins are getting better as well. So we have a revenue growth story that's accelerating and a margin growth story that's accelerating as well, right? Additionally, we have the profitability of the bottom line, earnings per share on a non-GAAP basis, obviously exploding to the upside as well. Now, if you look at the data center business, this is where the major growth is for the company. And this is honestly where a lot of the major growth will be for AMD, not just this year, but I'm talking for the next many years. Like I'm looking all the way out to 2030. If I think about where the major growth is for AMD over the next 4 or 5 years, it's in data center, okay? And this is going to be a number that grows to become an absolute gargantuan number. $3.9 billion in revenue data center for this most recent quarter versus $2.3 billion the same quarter last year. Operating margins of 30% versus 29%. Now, two things I want to highlight for you here. One is they said strong growth in public cloud deployments with 1,000 plus Epic instances existing 2024. Microsoft, Google, Amazon Web Services, Tencent, Alibaba. I just think it's great when you hear all the big companies, right? All the big companies are utilizing AMD. Sometimes there could be this false assumption that if Microsoft's using Nvidia, like they're not going to use AMD. No, that's not the way it works. Same thing, vice versa. They need all these companies. They need Nvidia chips. They need AMD chips. Sometimes they're for different use cases. Sometimes it's similar. Sometimes it's more like who can give me the more attractive, ROI, meaning who's going to give me a better deal on the chips, right? And then sometimes these big customers as well, they go with their own chips, in-house chips, right? Or they'll use ARM, or they'll use Broadcom, or somebody like that to do their chips. AMD powers 5 of the 10 fastest and 15 of the 25 most energy efficient supercomputers in the world. Now, if you look at client segment, $2.3 billion of revenue versus $1.5 billion in revenue. You look at operating margins, they went from 4% to 19%. That is extraordinary. I mean, absolutely extraordinary, like the growth there. Now, a lot of people think that, obviously AMD's capitalizing on Intel's woes over the past few years. And yeah, there's no debating that. Like AMD's winning, right? No, gaming segment is certainly not winning. Look at how bad the gaming segment business is for AMD in this most recent quarter. I mean, this is a disaster. There's no other way to put it. Business is in a complete disaster. Gaming revenue came in at $0.6 billion, $600 million for gaming segment. That's versus in this same quarter last year, $1.4 billion in revenue. Operating margin came in at 9% versus 16%. Ugly. Revenue was down 59% on a year-over-year basis. It's awful. Awful. And that's not the only awful business for them. They got another awful business that's getting a little less awful, which is good. It's getting very close to turning. But the embedded segment. Embedded segment this same quarter last year, $1.1 billion in revenue. The most recent quarter, $0.9 billion in revenue. Operating margin went from 44% to 39%. Now, keep in mind, both of these businesses are about to inflect higher, in my opinion. Embedded segment is probably going to turn positive, I would say, in the next 1 to 2 quarters, where the growth is going to start going up again and stop going down. And then the gaming segment, I think we'll have to wait till the back half of this year to start seeing that business inflect positive and get back to growth there. So if you look at the gaming business and embedded business, they're both dragging AMD's revenues. They're both dragging the margins, the profitability of this company. As these two businesses get fixed in 2025, which I believe they'll both be fixed by the end of 2025, right? You're going to see a massive help to AMD's revenues and AMD's margins, because these are two big drags on the business right now. Those will not stay drags, in my opinion. And then we're going to be talking, I think by the end of this year, we'll be talking about gaming growing, embedded growing, data center growth, obviously extraordinary, and embedded segment growth extraordinary, client business growth extraordinary as well, right? Now, if you look at the guidance, this is very important. They came in with $7.1 billion guide, okay? That's their midpoint. From what I saw, analysts were around $6.99 billion, so they're about $100 million ahead of where analysts are at. I wouldn't be surprised if they come in and beat that and maybe do 7.2, 7.3, or $7.4 billion of revenue for this particular quarter, right? I think they're going to want to start the year off strong and come in with a nice beat right at the first, because keep in mind, we're at the beginning of the year right now, but this quarter you're seeing in front of you right now, this was last year's quarter. This was October, November, December, right? Now we're in February, right? So the next quarter we get in 3 months from now, January, February, March. I think they're going to want to start their fiscal year with a bang. And so I think there's a high probability they're going to come in and beat their expectations significantly and maybe do closer to a 7.3 or $7.4 billion, which they opened the door for that. Because they said, 7.1 is our midpoint, plus or minus 300 mil. So Lisa Su's not the type to want to miss numbers and play that whole game. If I had to guess, I think they're going to do closer to 7.3 or 7.4 billion, which, keep in mind, guys, if they do that, that's $300 to $400 million ahead of where analysts are at right now. It's not a small amount of money. That's a large amount of money for a company that's AMD size. Remember, this is a company that's going to be way less than a $200 billion market capitalization tomorrow, right? No, if you look at their overall income statement here, it was a C grade. Now, you can say, C grade, that's not good. I can tell you, if it wasn't for the one-offs here, this would have been likely an A- or an A grade income statement here. Revenue $7.6 billion versus $6.1 billion. Cost of sales $3.5 versus $3. Naturally, your cost of sales is going to go up, especially if you're a semiconductor company that's doing a $1.5 billion more in revenue on a year-over-year basis, right? Now, if you look at amortization of acquisition-related intangibles, 252 mil, so that was a little hit for the company versus 215 the same quarter last year. So total cost of sales, $3.77 billion versus $3.25 billion. Gross profit went up to almost $3.9 billion versus $2.9 billion in the same quarter last year. So gross profit, beautiful. If you look at the gross margins, 51% versus 47%. R&D did increase for the company about $200 million on a year-over-year basis, but they should. I have no objection to that as an AMD shareholder. Like, with how big of a long-term opportunity here and how big the TAM is on these markets, AMD should be increasing R&D, especially when you have the sort of revenue growth they do. Like $200 million when your revenue is up $1.5 billion on a year-over-year basis, that's fine. Marketing, general, and administrative, 792 mil versus 644, so that was a pretty big increase there. Amortization of acquisition-related intangibles, 332 versus 420, so that was actually a help there. But look at this. They had restructuring charges of $186 million there. That certainly hurts, right? Versus they had no charge in the same quarter last year. So that's going to hurt your profitability on a year-over-year basis. But still, even with that, operating income came in at $871 million versus $342 million in the same quarter last year. But here's where, on a GAAP basis, numbers get screwed up, okay? Because look, if you look here, okay, they had basically an income tax provision of $419 million. So there goes like half of their operating income because of this kind of more one-off freak situation. Whereas in this same quarter last year, they had a $297 million benefit, okay? So this is weird one-off stuff that makes the bottom line look way worse than it is, but as long as you understand anything about accounting, you're like, okay, this is not going to keep renewing. Like their income tax, provision is not going to keep being half of their operating income. That's completely ridiculous, right? And obviously last year they had a huge $300 million basically benefit there. So the moral of the story is, if it wasn't for those freakish kind of one-offs there, this would have been an A- or an A grade income statement for AMD. So it says C, it's deceiving though. Deceiving. Now looking at the balance sheet of AMD, it's stronger than it's ever been. $57 billion in stockholder equity on this company now at this point in time. $3.7 billion in cash and cash equivalents. Short-term investments of $1.3 billion. Looks really, really good here. And keep in mind, they've been doing a lot of big acquisitions that are going through. So, I think they got one more to clear, I believe, that needs to be government approved. And then after that, I don't see AMD doing any big acquisitions for a while, in my opinion. Once that last big one clears, I don't really think there's a need for AMD to do any major acquisitions for probably the next several years. They could do little tuck-in acquisitions here and there, maybe in the next few years, but I don't really foresee a big one coming anytime soon here. I think AMD is very well positioned. Lisa Su's got this company very well positioned. Remember, they bought Xilinx years ago, right? Now, if you look here, the stock is down almost 50% from where it was 10 months ago. If you look where the stock was 10 months ago, it was 210 plus on the stock, right? 212, somewhere around there. And the stock's fallen off a cliff. It's trading under $110 after hours, which means it's down around 50%. But the fascinating thing is, look where the business model was 10 months ago. Look where the business model is today. The fundamentals have gotten dramatically better for this business. Not close. Dramatically better. And we're talking about a stock that's basically been cut in half. This is what I love to see. You could ask any great investor this, right? I've been playing this game for 16 years now. But you could ask any experienced great investor, people that have been investing 30, 40, 50, 60, 70 years, right? Ask Warren Buffett. Ask Peter Lynch. What is the most perfect situation for you to be buying a stock? And they'll tell you it's a situation in which a company's fundamentals are getting better and better and better, and the stock price is doing worse and worse and worse. And that's exactly what we are seeing here with AMD. The fundamentals are up and to the right, and the stock price is down and to the left. You've got to buy this stock. I mean, this is perfect. Like, I can't ask for a better situation than this. Like, this is incredible, right? Hey there, it's Jeremy. I hope you really enjoyed that clip here today. What I'm showing you right now is 1000x stocks thesis.com. This is a specific software that has been designed to save you time. It's a one-stop shop for long-term investors to know how the company is doing, listen to what management has planned for the future, and compare companies next to each other. Which big tech is the most undervalued? Is that small cap company you heard of actually worth investing in, or are there red flags? Get the front row to the conference call, be able to access the management, which information is right to make an educated decision. Get all that information through 1000xstocks.com. You can access that through the description area. You can apply for access to 1000xstocks.com, or you can go to 1000xstocks.com. Alrighty, Jim Cramer on Nvidia.
Cramer was listening, and he did come down to join us on the set.
I always listen.
And I'm glad we had a chair here for you, because I really feel like this is one of those conversations after one of these pivotal weeks that we need to hear from you. What do you make, first of all, of Steve's assessment that, look, a lot of these stocks were punished too much, that they still have an overwhelmingly large competitive advantage, and now's the time? You might not time it perfectly, but why not today?
Okay, look, I think the problem is you can never pretend that you know when you don't know. And it's always gutsy to come out and say, listen, I don't know. I mean, look, right now, Jensen Huang's with the president. I would like to hear what he has to say, and we need, if you're long this stock, you need to hear that the president wants to undo what Biden did right at the end, which is to say, listen, we're only going to let them sell a lot to 18 friendly countries, which, by the way, they left off some major countries like Israel, which is supposed to be a friend as far as I know. I listened to Alex Karp earlier and say definitely, but lots of other countries that are in the EU. So we need to hear that reversed. You need to hear that the president doesn't fear that chips are going to go to China of the lower level. Remember, they were giving lesser chips to China, and that Nvidia has been able to convince him that there is no backdoor from Singapore. There isn't, because I think that they are able to account for all those. So let's go back to, and by the way, I know that Jensen Huang hates Moore's Law, thinks it's dead. But I think the biggest issue is you got through the hurdle of Meta saying they need it. We know that Oracle needs it without a problem. We absolutely got that. We know that Apple wants anything it can get, and they're a free rider. They'll be good. Mm-hmm. But we know that Microsoft needs more.
So let me tell you guys about something very interesting that happened on the Meta conference call, okay? Zuckerberg got asked pretty point blank about DeepSeek and if this is any sort of proof point around less chips being potentially needed from Nvidia, right? Like, not in those exact words, but basically that was the gist of it. Now, Zuckerberg's response to this was very interesting, because you could take this one of two ways. He said it's too early to know. And he said, he's still leaning toward all this spend and CapEx is going to be a good thing overall. It's going to be beneficial. But he didn't close the door on it. And I think that's the important thing. He did not close the door. He could have just blown it off and said, no, there's no way. Like, we have to spend as much as possible. Boom, boom, boom. And just close the door. But he mentioned, at least one time, if not several times, that it's too early to know. Which, that just opens the door of that, like, maybe there's something there. And maybe we could have CapEx numbers come down a little bit in the back half of this year. You don't want to bank on that, but the door's open at least. And so I thought that was very telling. And I thought that was something that was very overlooked in that Meta conference call that I was listening to. And I'm like, this is interesting. Okay.
Oh, no,
because you got to remember, there's only upside here for Meta. Meta's already announced they're going to spend a ridiculous amount of money, like $60 billion plus this year, right? Crazy amounts in future years. They haven't given specifics, but big numbers. So there's only potential upside. Like, there's only a situation where essentially they bring numbers down. That's the thing. Like, they've already gotten our brains to already think like they're just going to be spending like drunken sailors. And so anything other than that is actually a positive for the stock.
Done. And next week, Amazon, what happens if Amazon says, it plays hardball and says, you know what, we don't need as many. Then you have this plummet, and I am concerned about that.
That's true.
Otherwise, look, I think that DeepSeek's playing checkers, and these guys are playing grandmaster chess. It just so you know, you cannot use. By the way, the reliability of DeepSeek is ridiculous. I don't know why anyone thinks it's any good. We were doing some stuff putting in Winston in 1984, and first it was talking about how he was told to dissemble in favor of the government, and then it took that right away. But I will say, look, what can DeepSeek not do that Jensen knows that Nvidia can do? Multimodal memory, spatial intelligence, physical actuators, vision, and touch. So you can't use it for robots, and you can't use it for self-drive. So what the hell good is it? So anyway, it's good and bad. But boy, do I ever want to hear from Amazon. I want to hear from Google too before I just say, hey, you know what? We're home free.
So is it then overstating it to say that they have Nvidia, being the they, have gone from in the driver's seat to on the defensive? I suppose both can be true. I mean, they are still in the driver's seat. Look, we didn't even mention OpenAI, the fact that they're doing this huge raise at such an incredible valuation. Where are they going to go with the money to buy what they need? Probably Nvidia.
Right. Well, absolutely. You go to Nvidia. I think that I used to work very close with Stephanie, and we would say, well, you know, when someone doesn't have anything to say, you can't necessarily attribute that it's good. And there are many things you can say, and we've all had many different guests during quiet period. And they didn't reveal the numbers, but they gave you a sense of what's going on. Alex Karp is quiet period. He's reporting on Monday. And he just did this incredibly long interview with Sarah. And you can say, well, if he can talk like that and talk about broader themes of Palantir, then Jensen should be able to talk about it in a situation where obviously his stock has had a material move.
So you're saying the silence is deafening to
I think
you
silence
on
is
Nvidia's
not
part. Now,
golden.
maybe Jensen Huang uses the appearance at the White House today. As I said, I mean, obviously in these circumstances, there are cameras there. We're going to have a stakeout camera. Right. And maybe he comes to the camera and he addresses some of the questions from our producer or reporter who might be on site. We'll have to wait and see. But you own the Amazons of the world that Jim wants to hear from, and you're going to hear next week from that company?
Yeah, I think they're going to spend more money. And by the way, Jim, OpenAI, the rumor is they're actually going to use Broadcom's custom.
Well, that's the custom chips, but Broadcom's going up.
Right, so they'll use both.
Well, and we know, by the way, that Amazon likes custom because it's cheaper.
That's right.
I know that Meta does everything because Hock Tan's on the board of Meta, and he's the CEO of the.
Stop spending them.
No,
I mean,
no, but I'm just saying.
Maybe a little less than what they were going to, but I can't imagine that they would They have to keep up with the rest of the industry to be leaders.
They have to spend. I'm just saying, what happens if they're caged?
Yeah.
Why don't they why don't they bargain to get the best price, even though they need everyone? I think Nvidia is one of the best companies in the world. That's not changed. But I do say that this is a thicket. I'd like to hear that even if Amazon walked away, we don't know. Remember the demand was insane and demand was crazy? I just want to hear that.
That's right. And that's what Jensen said.
I want to hear it again. Is that too big? Is that too much to ask?
I think that was at the Communicopia conference out in San Francisco.
He does have he has this huge conference in March. But look, am I nervous? If you're not nervous and a stock has that kind of move, I don't know if you're a good manager.
And what do you make of the move from Jim to trim some of his position? Because he's admittedly a little nervous about where we are.
Remember, that's what we do.
But bear in mind, it's, you take NVIDIA, I don't have to tell you this, it's up threefold in 15 months. I'd be a fool not to. Give me a second here.
No, I'm saying this is why you're a manager.
Exactly, it's risk management. But can I just point something out that I think is important? NVIDIA, Microsoft, they don't exist in a vacuum. You started, Scott, your first question was, does the market have jitters? And I said only a sector does. Look, Microsoft, and I want your opinion on this, Microsoft and NVIDIA are down on the year. The market, S&P 500 is up. Is it possible, Jimmy, that maybe the market broadening can happen without a disaster rate? Because everybody says that concentration of the top 10 names, it usually comes down with the market having a wipeout. Is it possible that maybe we get the broadening without an overall disaster?
I had an existential crisis this week. I said to my wife, I believe I missed a 10-bagger in Brinker, which is Chili's, because I've been so concerned about NVIDIA. And that makes me a manager who sucks. And she goes, I think that's a little too strong.
I think that's strong, too. I think it's too strong.
Like I said, it was existential for everything. But, you can't do it. You can't just say, I'm going to focus on NVIDIA, and I'm going to miss a 10-bagger because I'm a good manager. No, you're not. So that's what's at stake.
Give me just a little...
So it's funny. I laid it all out. I told everybody this was going to happen, man. I laid it all out last year, in the third quarter and fourth quarter. I told everybody, just wait. In 2025, everybody's going to start talking about demand. How much demand is there really for Nvidia? Is there as much as we thought? What are future growth rates like? And I ran you guys through all of that, right? And here we are. Now we're in 2025, and it's exactly what we're seeing. All these demand worries, what's going to happen here. And I don't think these worries are going away. Nvidia is going to come out with their next numbers, a month from now or whatever, right? And I'm sure they'll be good. They're going to be good. Of course they're going to be good. Guidance is going to be good. But any little piece of weakness, whether it's in the conference call, whether it's in the guidance numbers, anything, now at this point in time, they're going to pick at and they're going to run with it. And that's going to be like a bigger worry. And so Nvidia is going to be in a tough spot short term. Like long term, they're still set up very well, obviously. But short term, they're going to be in a tough spot just because every time the stock gets some momentum, people are going to bring back up, I don't know, is demand really going to be there as strong as we think? What about in the back half of this year? What are growth rates even going to be like? What about in 2026, right? All these companies going with Avago, Broadcom, they're going to go with their own, custom chips from even different companies, right? They're using ARM, they're going to use AMD, whatever. So there's just going to be a cloud around Nvidia for a while here. It's not, you don't just magically remove that cloud. You can maybe the sun can peek through for a moment, but then the clouds are coming right back again. And so that's just kind of an issue that NVIDIA is going to have to deal with for the next, honestly, it's going to be a bit of time. It's going to have to deal with this, right? And if we run some numbers, let's run some numbers around NVIDIA here. Let's run some projections. I wasn't planning on doing this, but let's go ahead and do it, okay? So, let's say growth rates come down quite significantly. Let's say this year they do 40%, then they go down to 30%, then they go down to 20%, then all the way down to 10%, right? And so let's say this year's net income, let's just run them at the same numbers as revenue goes up. So let's say they don't really get any leverage in the bottom line, which is probably unrealistic. They should be able to get some leverage in their bottom line. And so, let's go ahead and run some projections here. Let's say, right now you're going to value the company a little higher. So let's say it's like a 40 to kind of 50p ratio, given the growth rates it has right now. And then you say, okay, growth is decelerating, so let's take it down to like a 35 and a 45 here, okay? Then 20 to 20, we'll tame it down even a bit more, 30 to, let's go 35, and then down to 10. So now we can say, let's do it down to a 20, let's go down to like a 20 to 25 PE here, because you can say, oh, growth is really dying, right, for this company. Yeah, I mean, if you get the valuation multiple contraction quite significantly, it sets you up in a tough situation. Because if the company's doing $272 billion of revenue in 2028 with $150 billion in net income, right? Net income margin still 50+%, but you only command, let's say, a 20 to 25 PE, basically you get no return on the stock, or very little return all the way out to 2028. That's tough. Now you could say they probably buy back a ton of shares in that amount of time, right? So take a ton of shares off the market, so that will help the earnings per share be stronger. So maybe the CAGR you're going to get's a little higher than where we're at here, right? But it's still like, even if you factor in share buybacks, it's still not like it's like going to be that great a return. You're probably looking at, a 5 to maybe 15% CAGR, or maybe 5 to 10% CAGR, somewhere in there, which for a stock like Nvidia is not exactly the best. So, yeah, this will be really interesting. Like, that's why Nvidia, I think, is one of the most interesting stocks in the market.